Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality free trading education. Now, without further ado, let's jump straight onto the charts. Okay, so it's definitely time for an update on the situation that we currently have on USD CAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that the market has just created a very strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has now retraced exactly to the zone which is in between the 50% and 0.618 of the Fibonacci taken on this monthly impulse, which if we extend it to the left, we can also see how it was the previous high before the market created all this move to the downside, meaning that this is also previous monthly resistance turned support. Now, this creates confluence of support at this zone, which the market could potentially reject to the upside. Going down on the weekly time frame, what do we have? Now, from a weekly perspective, if we look left, we can see how exactly from here, all this move to the upside was created. As we're testing exactly the same zone, there would be a good probability of seeing this move to the upside as well. Going down on the daily, what do we see? Now, first of all, from a daily perspective, I did speak about USD CAD a few days ago. I spoke about it when the market was here. I explained all the reasons for which we could expect after the creation of this M pattern, this rejection to the upside. And in fact, that is exactly what the market is currently doing. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. However, at the moment, what do we have and where we could be looking for the next potential move? Now, in a situation like this, we must acknowledge that this area is resistance. This is previous daily resistance, again here acting as resistance, and at the moment, as we're testing it, the market is already finding some resistance at the zone. Until the market will remain below this area, even though we have already seen that monthly and weekly seem quite bullish, until here on the daily time frame we will remain below this zone, the market could easily reject to the downside. So, as usual, being reactive and not predictive in this case means that we would need to wait for all the time frames to align in the same direction in order to increase the probabilities. If the market would break above this daily resistance, at that point this daily resistance would become support. And since the monthly and weekly are already bullish, at that point also the daily time frame would be bullish, increasing the probabilities that on the retest of this previous daily resistance turn support, at that point there would be a potential move higher. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for the CAD, what we can see is that with the last reports, net positions have been decreasing. We went from having a positive net positioning of plus 26k net positions with 24k shorts compared to 51k longs, so way more longs than shorts. From an institutional perspective on the CAD, all the way down to now having a negative net positioning of minus 30k net positions with more shorts than longs, so completely the opposite positioning on the institutional side of the market with 56k shorts compared to only 25k longs. This means that the CAD is getting weaker, and a weak CAD means that USD CAD is getting bullish. Now, you might be asking, where is the USD here? You have to keep in mind that all currencies on the spot are traded against the USD. So if you're checking the data for the CAD, you are already checking CAD USD. But since we want information on USD CAD, a weakening CAD simply means that USD CAD is getting stronger. This increases, again, the probabilities that if we see the break on the retest, we might see a rejection to the upside away from this zone. So if we do get a break on the retest, how we could be approaching this potential rejection to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, that is all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we use precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will have the possibility to join and gain automatically access with the email and password that you will create during the registration process. So definitely make sure to at least go and check it out at transparentfxtrading.com, and I will see you on board. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.